So is my screen visible?
Yes.
Okay, just write down this question.
Sir, can you first clear yesterday's doubt?
Now Nasiha told me at the end, that's the reason I started with cash flow.
Oh, okay.
Okay.
Yes.
Yes, please write this question, and once it is written, tell me it is done.
Done.
Okay, Fiza, please read the question.
Write a note on cash and cash equivalents.
Okay, so in this concept, no, you should know what is the difference between cash and cash equivalent. Okay, so that's the reason I am taking this, right? So cash and cash equivalent. See, in cash flow statement, we first understand two important terms. The first term is called cash. Okay, so just write down this number one and give the heading as cash.
Done.
Okay. So now what do you mean by cash, right? See, cash means money that is immediately available for use. Whatever money is immediately available for use, that is called as cash. Okay. It includes cash in hand. Cash in hand means what? Physical notes and coins which are kept in the business. Okay. And then demand deposit with bank, that means money kept in a bank that can be withdrawn whenever required. So these two things we called it as cash. Whatever physical cash is there in our business and whatever money is there in our bank which we can withdraw it immediately. So these two things indicates cash. Understood what is the meaning of cash?
Yes.
Okay, let us see one example. Suppose A Limited is having cash in office 20,000, and in current account, in the bank current account, he is having 80,000. So therefore, what is his cash balance? According to accounting standard 3, he is having a cash of how
One
much?
lakh.
1 lakh rupees.
1 lakh.
Okay. Now give the second heading as cash equivalent. Now cash equivalent means near to cash, or we can call it as good as cash. Then written this second heading.
Yes.
Okay, so now cash equivalents are investment that can be quickly converted into known amount of cash with very little risk of losing value. Cash equivalent means you had invested your cash somewhere, and by selling it you can convert it into cash, and there will not be any loss in the value also, right? They generally have short term maturity and high liquidity and easy conversion into cash. These are the features of cash equivalent, and insignificant risk of change in value. And the important point is generally the maturity period is less than 3 months, that is called 90 days, right? So these are called as cash equivalent. Like say for example, ABC Limited invests rupees 2 lakh in a short term investment that will mature after 2 months, and it can be easily converted into cash. This investment can be treated as cash and cash equivalent. So this 2 lakh we call it as cash equivalent. Okay, and the upper part, this part is called as cash, and this 2 lakh is called as cash and cash equivalent. So together if we say cash and cash equivalent, the amount will be 3 lakh. Clear? Any doubt?
Okay.
Sir, what is the meaning of maturity?
Maturity means the due date.
Okay.
Okay, the due date
Yes.
should be less than 3 months.
Okay.
Okay, so this is something about cash and cash equivalent. Now let us see the next concept, that is called as non-cash transaction. Okay, so just write down this question, write a note on non-cash transaction.
Done.
Write a note on non-cash transaction. Okay, now let us go through this. What do you mean by non-cash transaction? Okay, so see, non-cash transactions are transaction where no actual cash or cash equivalent comes into or goes out of the business, right? Means there are some transaction where cash is neither coming in the business nor it is going out from the business. So such transactions are called as non-cash transaction. Okay, so why you should know this, therefore they are not shown in the cash flow statement, right? Means what? Since there is no flow of cash, means neither the cash is coming in or nor the cash is going out. So that's the reason such transaction will not be shown in the cash flow statement, because a cash flow statement records only the movement of cash and cash equivalent, right? Because the purpose of the cash flow statement is to show the movement of cash and cash equivalent, right? And since there is no flow of cash, so the such type of transaction will not be coming in the cash flow statement, right? Easy way to remember, no cash movement means no cash flow, right? For example, if a company buys a machine worth rupees 5 lakh by issuing shares instead of paying cash, the machine is acquired but no cash is paid, hence it is a non-cash transaction. Means what? See, here the company has purchased the machinery, right? But they had not paid the money either in the form of cash or in the form of check. They had paid the money in the form of shares, right? So is there any movement of cash in this transaction or in the example,
Uh,
Mm.
right? So that's the reason
No.
it will not be shown in the cash flow statement. Okay, these are some of the important examples, right? Example number one, right? Issue of equity shares or debenture against purchase of an asset, right? Asset is purchased but payment is made through shares and debentures, not cash. Okay, so this type of transaction here, it is same like this. You had purchased a machine and you had given either a share or a debenture, not cash. So it is a non-cash transaction. It will not be shown in the uh, cash flow statement, right? The second one is issue of equity shares on conversion of convertible debentures. Now here also what you are doing, you are giving equity shares and you are taking the debentures. So debentures are converted into shares. Again there is no movement of cash. So no movement of cash means no effect in cash flow statement, right? Then this we had already discussed, charging depreciation on fixed tangible assets. So again, depreciation is an accounting expense, no cash is paid. Okay, so no cash is paid. So since this is a non-cash transaction, we show this depreciation as add in the operating item, right? Then similarly, amortization of intangible assets, this is also a non-cash item. Writing of old fixed intangible assets, this is also a non-cash item. And declaration of final dividend. Now only declaration does not mean that we have paid the dividend. So this is also a non-cash item. Okay, so clear what are the non-cash items? Hello.
yes.
Okay, now the last part in
Yes.
this, just write the question, what sequence is to be followed while preparing cash flow statement. What sequence is to be followed while preparing cash flow statement? The first is just write down these 3 steps also, okay?
Done.
Done. See, additional information, notes to accounts and balance sheet. See, in a full-fledged question of cash flow statement, no, they will give you balance sheet, they will give you notes to accounts, and they will give you additional information. So what we have to do, we have to prepare our format of cash flow statement. That is the 3 activities: operating, investing, and financing, right? And after preparing the format, we have to first solve the additional information. After solving the additional information, we have to solve notes to accounts. And after notes to accounts, finally we have to solve the balance sheet. This is the sequence which we will be following for preparing a cash flow statement in case of a full-fledged question. Any doubt?
Yes.
No, sir.
Okay. Now let us proceed and solve. I think we had solved only one example, right?
Yes.
Okay. So let us take one more example. That is example number 3. Okay. Now see, the following extract of balance sheet of Vanijya Limited as on 31st March 2023 and 24 is given here, right? Now see, here you have to be careful. The the earlier year is called as the opening balance, okay, and the new year is called as the closing balance. Now sometimes they change the sequence. Okay, you have to find out which one is the earlier. Earlier is the opening balance, and uh, the new one, the current one, is the closing balance. Okay, so they had given us equity and liability. In that equity and liability, they are telling that share in the shareholders fund, there is a share capital of 65,000 and 45,000. There is a reserves and surplus of 42,500 and 24,000. Okay, then they had given us notes to accounts. Okay, in notes to accounts, they had told that there is a general reserve and there is a surplus. Okay, and in additional information, they are telling that an interim dividend of rupees 7,000 has been paid to the shareholders during the year. Okay, so now we are supposed to prepare the cash flow statement. Okay, and based on that cash flow statement, we will be answering these questions. Okay, so let us prepare the cash flow statement. Example number 3. Okay, just prepare these columns, and we will be doing it only the operating activity, because it is not a full-fledged question. Only cash flow from operating activity. Prepare it in this format. Okay, once the columns are ready, please tell me it is done.
Done.
Okay, now in cash flow from operating activity, it always starts with the net profit, right? So just give the heading as net profit. We will write it down afterwards. And after net profit, we should always give this heading: adjust non-cash and non-operating item.
Yes.
Now let us start from here, from the additional information. Okay, see what they are telling in the additional information, that an interim dividend of 7,000 has been paid to the shareholders during the year, right? So interim dividend is paid, so we will write it here in the first line. Okay, write it here. Actually I had written as the second item, but 1 minute, I will insert one and I will put it there. This will come first, interim dividend. Okay, so write this interim dividend. How much interim dividend is paid? 7,000. This is called cash flow from, I mean, add interim dividend 7,000. Okay, any doubt?
No.
Okay, now after additional information we will be solving notes to accounts. Okay, so let us solve notes to accounts. Now in notes to accounts, see general reserve. What was the opening balance? Tell me.
15,000.
15,000. And what is the closing balance?
27,500.
500. That means general reserve is increasing.
Yes.
Okay, now what is the meaning of general reserve? General reserve means we are saving some part of the profit, right?
Yes.
So that means from 15,000 if you deduct 27,500, what will be the answer? Don't consider the plus minus sign, we just want to know the difference amount. How much it is?
11,500.
11,000. Do it
Hmm?
properly.
12,500.
So 12,500 we will write here. Add general reserve or add transfer to general reserve 12,500. Why we are adding back? Because it is a non-cash, right? It is just an accounting entry. From profit and loss we had transferred to general reserve. So if we will add back, then we will come to know the flow of actual cash. Any doubt?
No, sir.
Okay, now let us proceed further and we will talk about the surplus. Surplus is nothing but profit and loss account, right? So initially it was 9,000, now it has become 15. So that means how much profit is made this year? Tell me. Opening was 9 and closing is 15. That means it is increased by
6,000.
6,000. So what is
6,000.
what is the current year's net profit? Here I had written the net profit. It will come in the outer column. So current year's net profit is 6,000. Okay. Now
But, sir, we have already paid the interim dividend, right? So it's a cash expense,
it is a cash
right?
expense, but it is not an operating item, right? Interim dividend paid is
Yes.
a financing activity. You are
Yes.
getting my point? So if they are telling us to prepare the full cash flow statement, we would have shown this in financing activity as minus.
It's non-operating,
Yeah, it is a non-operating item.
but then previously we wrote that we should remove non-operating, right?
So that's what we are doing. No, non-operating, what we are doing it, we are adding it. See, by this much amount the profit must have been reduced, because whatever dividend they had paid, they must have shown it as an expense.
Yes.
So profit must have been reduced by this much amount.
Yes.
So that is the reason what I am doing, I am adding back that. so that I will come to know that actually what what is the profit from operating activity. You're getting my point?
Okay. Yes.
Okay. Now you will add this to, that is, add this to, how much it is coming? Tell me the answer for this.
19,500.
Yes, 19,500. Okay. Now finally add this to
25,500.
25,500. So this 25,500 is called as operating profit before changes in working capital. Any doubt?
No, sir.
Okay. Now keeping this format in your book, you answer these questions, right? See, what is the first question they are telling? What amount transferred to general reserve in deriving the net profit before tax, right? So just refer to your format and tell me how much you have added, transfer to general reserve. What amount you have added?
12,500.
12,500.
B.
B. So 12,500 is the correct answer, right? Then similarly, we will read question of B. What is the treatment of interim dividend, right? So there are some options: full 7,000 added to net profit after tax, only 4,000 added to net profit after tax, only 4,000 deducted from net profit after tax, full 7,000 deducted from net profit after tax. So what we had done, tell me?
A.
A part, right? Full
A.
7,000 we have added, right? Okay.
Yes.
Now what they are telling, calculate the amount of net profit before tax. How much it is?
25,500.
The final answer which we had got, right?
Okay.
25,500.
E.
Okay, now here in D they are asking some conceptual question. What is meant by cash from operating activity, right? So see here they are telling that you can write in one line, cash from operating activity means the money which is generated from the regular flow of business is called as cash from operating activity. See, cash flow from operating activities primarily measures the cash generating abilities of the company's core operation rather than its ability to raise capital or purchase asset. Cash from operating activities are the principal revenue producing activities of an enterprise and other activities that are not investing or financing activity. Understood this? The answer of this is clear.
Yes.
A.
Okay. Now let us read the E question. Now in E what they are telling, see, issue of bonus share will not affect the preparation of cash flow statement as in this transaction no cash is involved. So this they are telling, this is the assertion, right? So yes, of course, issue of bonus share will not have any effect in the cash flow statement. Why it will not have any effect? Because bonus shares are given free of cost. Company doesn't take any money for giving bonus share. They transfer it just from the reserve. It is transferred to share capital. So there is no flow of cash. So this statement is true, right? So since there is no
Yes.
flow of cash, it will not come in cash flow statement, right? Now let us read the reason for that. So it is a non-cash transaction. Yes, it is a non-cash transaction. So this is also true, right? So what will be the correct
Yes.
answer? This both A and R are true, and R is the correct explanation of A. Okay.
Okay.
So the answer for E is what?
A.
A. Fine. So this question is
Yeah.
completed. Let us move towards the next question now. Let me close this.
Sir, I have confusion between profit after tax and before tax. Like, how will we know it? Will they mention?
This is profit before tax because here they had not given us the tax part, no? So we had not deducted the tax.
Okay, 25,500. Right?
Yes, yes. Okay. Now let us move to question number 5. I will take it. 4 is again a small question. Let me take question number 5, in which one minute. This is question number 4. See, example number 5 we will solve. Okay. uh, Wellprint Limited has given you the following information. Machinery on April 1 2016 50,000. Machinery on March 31st is 60,000. Accumulated depreciation on April 1 is 25,000 and 31st March is 15,000. During the year, a machine costing rupees 25,000 with accumulated depreciation of 15,000 was sold for 13,000. Calculate cash flow from investing activity on the basis of the above information, right? So with the help of this information, we are supposed to find out the cash flow from investing activity, right? So first of all, we will prepare the format for that. Okay. So let us prepare the format. Question number 5. Example number 5. Okay. Just prepare this format. Give the heading as cash flow from investing activity. See, we are learning part by part. You are getting in the first example, it was from operating activity. In this example, it is from investing activity. And then slowly, there will be sums in which we will be preparing all the three activities together. Is it fine?
Yes.
Okay.
Yes.
So give the heading as cash flow from investing activity. Done?
Done.
Okay. Now see, in this question, no, whenever such information is given, right, we are supposed to prepare the accounts, right? Now in this case, we are supposed to prepare two accounts. One is machinery account and another is accumulated depreciation account, right? So two accounts we will prepare one by one. The first account will be machinery account. Okay. So just prepare machinery account of 5 lines. Okay. And also prepare provision for depreciation account of 5 lines.
So every time we are solving investing activity question, we have to make
uh,
accounts.
uh, it is not that every time we are solving investing activity, if they had given some information regarding the assets, right? Like here there is an information that one of the machine is sold out, right? So in that case we are supposed to prepare, because it is having the effect on this machine and the depreciation, so we will come to know the flow only after preparing the account. Okay,
Okay.
if they would have not given anything, like nothing is sold or something like that, then there was no need of preparing the account.
Okay, sir.
Okay, yes, have you prepared it? Done.
Yes.
Okay, now see, whenever you are preparing the account, at the top of the page always prepare the golden box. I hope you remember it.
Yes.
Tell me, what is the first column? What is the first
Asset,
column?
asset, asset
No, no,
expense.
first column, heading normal, increase, decrease.
Yes.
Heading normal,
Asset, normal,
increase,
Increase,
decrease.
increase.
decrease.
Okay, written.
Yes.
Yes.
Tell me the first heading.
Asset,
Asset, expense, and loss.
Write down asset, expense, loss. Tell me the normal balance.
Debit,
debit,
Debit. Tell me what will happen if it will increase.
debit,
debit,
Debit. And decrease.
credit.
credit,
Credit. Okay. Yes.
Yes.
Now tell me the second heading.
Liabilities,
liabilities,
income, and
income,
profit.
Write down liabilities, income, and profit. Okay. Tell me the normal balance.
Credit,
credit,
Credit. What will happen if it will increase?
credit,
credit,
Credit. And what will happen if it will decrease?
debit.
debit.
Debit. Okay. Any doubt?
No.
No.
So now let us come to the question. Now see, this machinery is an asset.
Yes.
So what is the normal balance of asset?
Debit.
Debit.
Debit. So we have to, since the normal balance is debit, we have to write the opening balance on the debit side. Okay. So write the
Okay.
opening balance on the debit side of machinery account as to balance brought down. Any doubt?
No.
Now,
No.
if opening balance is on the debit side, then closing balance will always be on the credit side. Okay.
Okay.
So where
Okay.
we will write the closing balance here. Closing balance we have to write down. Closing balance will always be on the credit side. So what is the closing balance? 60,000.
Okay.
Any doubt?
No.
Okay. Now provision for depreciation. Accumulated depreciation is nothing but provision for depreciation. Now provision for depreciation is a liability. Okay.
Yes.
So what is the normal balance for liability? Tell me.
Credit.
Credit.
Credit,
So where we will write the opening balance?
In
credit,
the credit side.
On the credit side. So write it on the credit side. Buy balance brought down 25,000. Opening balance is on the credit side.
Yes.
Yes.
So where will the closing balance come?
Debit.
Debit.
So closing balance will come on the debit side. What is the closing balance? Tell me.
15,000.
15,000. So
15,000.
write it on the debit side. Any doubt in this?
No.
Okay. And please, I am requesting always take the support of golden box and you draw the golden box. Don't try
Okay.
to take it from your memory because you might make mistake. Okay.
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 Chaliye. Shall we proceed further?
Yes.
Yes.
Okay. Now see what they are telling over here. During the year, a machine costing rupees 25,000 with accumulated depreciation of 15,000 was sold for 13,000. Okay. So we will prepare one note for that. That is called working note, right? So you prepare it below, like below this account you prepare it. I had prepared in the side. Give the heading as machine sold. Okay. And what is the cost of the machine sold? The cost price of the machine is 25,000.
25,000.
Okay. And on that they are telling that the depreciation is 15, right? So from
Yes.
25 if you subtract 15, what will be the book value?
10,000.
10,000.
10,000, right? And it is sold for 13,000. Okay. So just write here less selling price 13,000. So what will be the balance?
3,000.
3,000, right? Now see, don't go on the sign, right? See, a machine of the, suppose you had a mobile of 10,000 and you are selling it for 13,000. So this 3,000, is it profit for you or loss for you? Tell me.
Perfect.
Yes, it is profit. No, see, you had a mobile, the value of the mobile is 10 and you sold it for how much?
13,000.
13. So how much extra you got?
3,000.
So this 3,000 is what?
Profit.
Profit.
Profit. Any doubt?
No.
Okay. Now let us write this in the account as well as in the cash flow statement, right? See here depreciation. Now we have to say, can I say depreciation means the value of asset is increasing or decreasing?
Decreasing.
Decreasing.
Decreasing. What the golden box is telling?
Its asset is increasing. It will be returned to the credit side.
If asset is decreasing, it will be written on the,
Credit side.
I'm not getting properly which side?
Credit
Credit
side.
side.
Credit side. So write it on the credit side by provision for depreciation. By provision for depreciation. What is the value? Tell me.
15,000.
15,000. Okay. Now the second effect of this, since here it is in the credit side, in provision for depreciation, it will come in which side?
Debit side.
Debit side.
Debit side.
We have to write here to machinery. To machinery. Same value.
Done.
Any doubt?
Done.
Okay.
No.
So depreciation is done. After depreciation, we have to pass the entry for this selling price. Okay. Now see what is the meaning of this. Selling price means you had sold the machine, right? So if you are
Yes.
selling the machine, that means the machine is going out.
Yes.
Yes.
So asset is increasing or decreasing?
Decreasing.
Decreasing.
Decreasing. So if asset is decreasing, what the golden box is telling?
If
If
asset is
asset is
decreasing, it will be written in
decreasing,
the
it will
credit
be
side.
decreased.
Credit side. So write in the credit side buy bank. Buy bank. What is the value? Tell me.
13,000.
13,000. Okay.
Yes.
Now see, the second effect of this will come in the cash flow statement, because wherever money is involved, it will go in the cash flow statement, right? Buy bank. So it is an investing activity. Just I am coming to the cash flow statement and I will write here machinery sold. Oh, sorry. Machinery sold. For how much it is sold? Tell me.
13,000.
Huh. So is the money coming in or it is going out?
Coming in.
Huh.
Coming in.
Since the money is coming in, it is a positive amount. Okay.
Yes.
Any doubt?
No.
Shall
No.
I proceed further?
Yes.
Okay. Now, 1 minute. Now we will come to the entry of this profit. Okay. Now see, don't consider think this point of view as a profit. Think it from the asset point of view, right? Means what? Why? Because we are passing the entry in machinery account. No, that's why. Now tell me, profit means what? The value of asset is increased or it is decreased?
Decrease.
Yes. Tell me.
Is it decrease?
Profit means what? Is the value of machine increase or decrease?
Decreased.
How decrease? Okay, otherwise we will
Because
do one thing if you are getting confused. Okay, you tell me what profit is increasing, right? What the golden box is telling?
it's the
When
profit.
profit increases, it will be written on the credit side.
It will be written on the credit side of profit and loss account. Am I right?
Yes.
But
Yes.
we are not preparing profit and loss account. We are preparing machinery account. So we will give the opposite effect. In profit and
Okay.
loss account, it is credit, right? So in machinery, where it will come, tell me?
Debit.
Debit. Any doubt?
Debit.
No.
No.
Any doubt? To
No.
profit on sale of machinery. How much it is? 3,000. Clear?
Yes.
Okay. Now, see the second effect of this, no, it would have gone in the operating activity. We would have subtracted from operating activity. But since in this question, they are telling us to prepare only the investing activity, we are not giving the second effect of this transaction. Okay.
Okay.
Yes, now everything is completed. Now we will close the account, right? So here the credit side total is heavier. So write the heavier total on both the side.
Done.
Okay, what is the difference? Tell me.
35,000.
35,000.
35. Now this 35,000 is to be written as to bank.
Yeah.
Okay. Now see, to bank means what? Money is going out, and that means we
Yes.
are purchasing machinery. Am I right?
Yes.
So since we
Yes.
are purchasing machinery, it is an investing activity.
Yes.
Machinery purchased, right? Tell me whether it will be a plus item or minus item.
Minus.
Minus. Why?
Minus.
Because money is going out.
Money is going out, so write it into bracket. Okay.
Yes.
Similarly, we will close this account also, 30,000 and 30,000. Tell me what is the difference?
5,000.
5,000 is the difference, right? Now this 5,000 will go in profit and loss account, right here by profit and loss account. Okay. This would have been gone in the operating activity, but since they are not asking us to prepare operating activity, we will not write it anywhere. Okay. So this question is completed. We will tell me the final answer of this. It is
14,000.
13 minus 35.
Oh, minus.
It is
Sorry.
minus,
22,000.
no?
Yes.
So minus 22,000. So since it is minus 22,000, we have to write here net cash used in investing activity. Net cash used in investing activity. In investing, normally we get minus. Why? Because we invest in the assets, right? So this is called net
Okay.
cash used in investing activity. Any doubt?
Done. No.
Okay. Shall we proceed further?
Yes.
Yes.
Okay. Now let us solve example number 6. This was 5, right? See, net cash used in investing 22 we are getting. Question number 6. I hope you are understanding the cash flow statement. Hello?
Yes.
Okay. Now let us solve this example number 6. I mean, somebody's voice is reversing back. Okay, let me read the question. From the following information, calculate cash flow from financing activity. Right? So this time this question is based on financing activity. A long-term loan is given, and during the year, company repaid a loan of 1 lakh. Okay, so let us solve this question number 6. Example number 6. Okay, just prepare this column.
Done.
Okay, now let us say this. it is long term loan,
it
right? So we
is
have to
long
prepare one account,
so we have to prepare one account
that is loan account,
that is loan
or you can say long term loan account.
account.
Even if you write loan account, it is fine. Or let me write it completely. Long term loan account.
Long term.
Yes. Once again,
Once again,
please prepare the golden
please
box.
prepare the golden box.
So which are the columns?
Which are the columns? Normal, increase, decrease.
No, no. First is heading,
First is heading,
heading, normal,
heading,
increase,
normal,
decrease.
increase, decrease.
Okay. What is the first heading?
What is the first heading? Asset, expense and loss.
Okay. Asset, expense, and
Asset,
loss.
expense and loss.
What is the normal
What is
balance?
the normal balance? Debit.
Debit.
Debit. If it is increasing,
If it is increasing, debit side.
Debit.
debit. If it is decreasing,
Is decreasing, credit side.
credit.
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 Okay. What is the next
Okay.
heading?
What is the next heading? Liabilities,
Liabilities,
income
income and profit.
Liabilities, income, and
liabilities,
profit.
income and profit.
What is the normal
What is
balance?
the normal balance? Credit side.
Credit.
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 If it is increasing,
If it is increasing,
Credit.
credit.
credit. And if it is decreasing,
And if it is decreasing,
Debit.
debit. Okay, done. The golden box is
then
done.
the golden box is.
Yes, shall I proceed?
Yes. Then shall I proceed? Yes.
Okay. One minute, Amma. The screen is not changing. The question is
Yes.
not
Not.
coming on the screen. Just a minute. Ah, yeah. So tell me, if
So
you are taking
you are taking
loan, if your company
your
is
company's
it asset
loan.
for your
Is it
company or
asset
is it
for
a
your company
liability?
or is it a liability?
So
Liability.
your voice is echoing.
Yes. Ah, yeah, I don't know why it is
Yes.
echoing
Yeah,
now.
I don't know why it is going.
From your side, any problem?
From your side, any problem? It's not echoing.
Yes. Now it has stopped.
It's now not. It has stopped. Yeah.
1 minute. I will Hello. Hello. Hello.
For like, hello. Hello.
Yes, am I audible?
Yes.
Okay. There was some
Yeah.
network issue, that's why. So you are
Okay.
you are ready with the columns?
Yes, sir.
Okay. So
Yeah.
loan is a liability, right? Now look at the golden box and tell me what is the normal balance of a liability?
Credit.
Credit. So the opening balance will come on the credit side, right? And here see
Sir, you're
this.
not presenting.
Sorry, 1 minute. Presenting is not there. Just a minute. Huh? Yes, is it visible?
Yes.
Okay. So where the
Yes.
opening balance will come, tell me. Normal balance of liability is
Credit.
credit. So it will
Credit.
come on the credit side.
Yes.
So write it on the credit side.
Yes.
By balance brought down. Again, some issue. My computer has become a bit slow. Balance brought down. 1 minute. Why it has gone to print mode? Okay. Balance brought down. The amount is 2 lakh. Okay.
Okay.
Yes. Now we will see what is the closing balance, right? So what is the
Yes.
closing balance? 2 lakh 50, right?
Yes.
So since the opening is on the credit side, closing will be on the
Debit side.
debit side. Okay, any doubt?
No.
Fine. Now let us read the statement, what they are telling, right? It is told that during the year the company has repaid a loan of 1 lakh. Okay. Now tell me, if you are repaying the loan, will your liability increase or decrease?
Decrease.
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 Just refer to the golden box and tell me what it is telling.
If the liability is decreasing, it will be on the debit side.
So we will write
Debit
it
side.
on the debit side. Right here to bank. We had repaid the loan of 1 lakh.
Done.
Okay.
Yeah.
Yes. Now here it is to bank. So it will come in cash flow statement. right? We will write in cash flow statement, I will say loan repaid. Okay, so if you are repaying the loan, money will come in your company or it will go out.
Go out.
So whether you will write it in plus or minus.
Minus.
Minus. Okay.
Done.
Yes. Now there is nothing given, so we will close the account. Heavier total on both the side, 3 lakh 50, 3 lakh 50. Tell me what is the difference.
1,50,000.
1 lakh 50. So 1 lakh 50 will be buyback.
Done.
Okay. Now buy bank means you have taken the loan, right? So I will write here loan taken. Now tell me loan taken, whether it will be plus or minus.
Plus.
Plus.
Plus. Tell me the final answer of this.
50,000.
50,000.
50,000. So this 50,000 will be called as net cash flow from financing activity.
Done.
Done.
Okay. Uh, yes, now shall we solve your query of that partnership?
Okay.
Yes.
Okay. So you just bring your textbook and read the question. I will also take the textbook.